Alright everybody, so we're going to take a look at some opportunities that were available today. Basic springs and up thrusts. This is just one configuration, not the only configuration I use, but a very easy to follow along configuration. Alright, so you have the hourly and the 3-minute and volumes. Alright, the volumes right here. This is volume and this is volume on the hourly. But we're just looking for springs on the hourly and buying activity on the 3-minute. Start off with the ES. So you see that there are a lot of springs in the ES. First of all, I want to say it has to be in an uptrend. Springs are only valid in uptrends because spring in downtrend is a lower low. Alright, spring in a downtrend is a lower low. Spring in an uptrend is not. Alright, and consider it as a higher low within an uptrend. Alright, so we see that there's one here and one there. Alright, so this one here occurred right there at 68.44.50. At 68.44.50, which is this price, you had a pretty strong upwave, biggest in 41, and volume biggest in 28 upwaves. So that's valid. I usually like to see big green here, like a big green, and it is, you know, compared to the background, but the initial selling activity is extremely heavy. So that's not a good sign. Still, the demand did come in, and 41, biggest in 41, biggest in 28. After that, price pulled back, tested, and it just made a higher high. So this is a very small trade, you know. It's like a 2-to-1. You have demand and eventually comes up to this area, makes a higher high, but there's selling in the background, like right here. Someone's selling. That's probably why it's not going through. After that, there is selling activity again, and lo and behold, we're back into a spring position. So the question is this spring going to get bought? Right? Is this spring going to get bought? Right? And are we in an uptrend? Yes, we are in an uptrend. Is the spring going to get bought? It's in spring position. Is it going to get bought? It did get bought. The volume increased to 59,000. And this wave is the biggest in 48 waves, biggest volume in 35 up waves. So that's a lot. This is the most amount of volume, and this is the most amount of size. So you have size and volume. And buyer stepped in to take price higher. I don't know how much higher it's going to go, because to be frank, there's some weekly level up here. I saw it on the it was the daily chart. Let's move on to the next market. All right, let's go to gold. Gold had a spring, 42.03.30. 42.03.30. So let's see. So, you know, the question is it getting bought? And the answer is it did get bought. Now, again, I prefer stronger volume, but the price action there is saying that it's being bought. See this? See the demand? there is demand. That demand got tested and price went up. Right there, demand. So what happens is price breaks these lows. It broke 42.26, went down to 42.03, and 42.03 was bought. How do you know? There's a demand. What happens? It pulls back, giving the entry up here, and then rallies. You got your trade. Let's move on to next. Copper. Copper had a spring at 531. So springs are, remember, springs are attempted breakdowns in an uptrend. And those breakdowns, they get bought, because if they don't get bought, it's going to change the trend. So they get bought. So you have the spring, and let's go to right there. Look, this is what I like to see. You see the volume? The spike in volume? Biggest in 24, biggest volume in 24 waves, up waves, biggest up wave in 24 up waves with striking volume. So this attempt to break got bought. Something happened because there's buying activity, and you can tell by the volume signature, right? And it goes up. So that's this spring right here getting bought. Let's move on to the next one. Go to crude. Crude has right there. So we'll take a look. That was the demand right here. But this one you can't really buy the pullback, it's not really shallow enough. So it just keeps going. Right, let's move on to the next market. Nat gas. Nat gas had a spring. 487. Right there. So it was 487. You see? Big volume. Biggest in 49. Biggest in 49. Comes back. You had a climax, a little climax in the background too. That big red right there. Climax, boom, and demand pulls back to test and it rallies. All right, so you see the springs are working, but remember they're only working, and they don't all work obviously, but the probabilities are significantly higher in strong trending markets. A spring is not a spring in a downtrend, and even in a sideways trend, it starts acting strange. But in strong uptrends, so you really need to know the high time frame uptrend. You should, I'll explain that in a minute. I'll explain what's going on. So this, yeah, I don't know what this is, but this, there was a spring, I don't know, was that yesterday? All right, never mind. There's supply here coming from higher time frames. You want to take a look at the euro on the daily? I think there's some problem with the euro. Look at this. See? And if this market is trouble. So the hourly, which means the daily, must be at a key level. right? That it's taking a look at, and supply is coming in. This is not small amount. I think they, yeah, there's a problem. Problem for the longs in the euro. Anyway, I'm done. All right. So the thing I wanted to explain was you have to know the daily. So first thing is if you're trading springs and up thrusts, and these are just very common setups, right? They only work with higher time frame direction. Right? A spring only works if you have favorable high time frame direction, and in general, whether it's a spring or up thrust or whatever POC, whatever order block, just remember this: these are entry setups. An entry setup is just a way of getting in. You do not know if it's going to work. You also don't know how far it will go. These are the two unknowns. In any setup, you don't know if it's going to work and you don't know how far it will go. Right? Setups are just a way to enter the market. So that's why we look for markets already going up on a higher time frame, because we don't know if it's going to work. So why take that? Why try to figure that out when you can just pick a market that's already going up? So that takes care of number one. Now, how far it will go, there's many techniques. If you're using a bar chart, or candle chart, typically the higher high. Why? This is usually the minimum target is the higher high. Usually, it's some type of higher high. And the reason for this is because springs resolve trading ranges. So springs resolve trading ranges means what? It means it's going to be going to a higher high. Now, how high that is, we don't know, but that's what usually happens. Right. And that deals with this second thing of how far it will go, because we just target the higher high at a minimum. And it's a higher time frame, higher high. Usually it's a higher time frame. Yeah, it's a higher time frame, higher high. Okay. So I showed you some springs and how to combine high time frame with lower time frame. And these were setups that occurred today. All right, there you go. Take care. Bye.